Welcome back to the Ultimate Trading Podcast for beginner traders. I'm Isabel Maria, and today, we're diving into one of my favorite trading strategies, breakout trading. If you've ever watched a chart and thought, wow, the price just surged out of nowhere, then you've witnessed a breakout. But behind that seemingly sudden move is a logic, a rhythm, and an opportunity that can be captured if you know what to look for. Breakout trading is all about capturing significant price movements the moment an asset breaches established levels of support or resistance. Think of support as a safety net where buyers step in to prevent prices from falling further, and resistance as a ceiling where sellers hold the line. When the price decisively moves beyond these levels, it's often the start of a strong trend. The market has shifted its balance, and momentum starts to flow in a new direction. The key word here is decisively. A breakout without conviction can trap the unwary trader. So, how do you identify a real breakout? The first and most critical signal is volume. Breakouts accompanied by significant increases in trading volume tell us there's genuine market interest driving the move. Without volume, a breakout is often nothing more than a false signal, a quick spike before the price retreats back into its previous range. The second hallmark is volatility. Breakouts usually come with heightened price swings, which creates opportunity but also requires careful risk management. And the third, sometimes overlooked, factor is clarity. Breakout trading naturally provides defined entry and exit points. You know where to place your orders, where to set your stop loss, and where to take profits. That clarity is a huge advantage, especially for beginner traders who can easily get lost in the noise. Let's make this tangible with a story, because the market isn't just numbers, it's a living, breathing arena of psychology, behavior, and emotion. Meet Emma, a trader who decided to apply breakout trading strategies to the pound sterling to US dollar currency pair. Emma had experience in the markets, but she wanted a structured approach that could consistently capture big moves without overexposing her account. She started with thorough preparation. She reviewed historical price data and identified key support at 1.3 and resistance at 1.32. Over several weeks, she noticed a symmetrical triangle forming, a classic pattern signaling that price was consolidating, building energy for a potential breakout. The Bollinger Bands were narrowing, an indicator often signaling that volatility is about to explode. Emma's plan was clear: she would enter only when the breakout was confirmed, not when she merely hoped it would happen. When the pound sterling to US dollar pair finally broke above 1.32, volume surged. Emma initiated a long position, but she didn't go all in. Her stop loss was placed at 1.31, just below the breakout level, limiting her potential loss to 100 pips. Her initial take-profit target was 1.34, providing a clean 1-to-2 risk-reward ratio. Here's where breakout trading gets both exciting and psychologically challenging. The price surged as expected, but as it approached her target, Emma noticed a bullish continuation pattern, a flag, forming. The instinct might be to panic and lock in profits, but the disciplined trader recognizes opportunity in pattern evolution. She adjusted her take-profit to 1.35 and moved her stop-loss to break-even at 1.32. By doing this, she eliminated risk while leaving room to capture additional gains. When the price hit 1.35, Emma exited with 300 pips in profit. Emma's trade illustrates several lessons that every trader, beginner or experienced, should internalize. First, volume confirmation is essential. Without it, the breakout may not have any real backing. Second, risk management is not optional, it's the backbone of longevity in trading. Third, flexibility matters. Markets evolve in real time, and your plan should evolve too. Emma's ability to adjust her take-profit and stop-loss to match the emerging price pattern turned a good trade into a great one. Let's break down the mechanics a bit further. Breakout candidates often appear in identifiable chart patterns: triangles, ascending, descending, symmetrical, rectangles, flags, pennants. These patterns represent consolidation and energy buildup. Support and resistance levels act as roadmap for entries and exits. Technical indicators like Bollinger Bands, moving averages, and RSI provide confirmation and help filter false signals. Sometimes price will break out and retest the previous level. Entering on the retest can improve your risk-reward ratio and reduce the chance of being whipsawed by a fake breakout. Position sizing is another key component. Even a perfect breakout setup can destroy an account if you allocate too much capital. Breakouts can move fast, and sudden retracements can occur. A proper position size protects your account from being overly exposed, allowing you to trade consistently rather than reacting emotionally. Trailing stops are also invaluable. They allow you to lock in gains while leaving room for the market to continue in your favor. The psychological dimension cannot be overstated. Breakout trading is exciting, but excitement can lead to overtrading or premature exits. You need patience to wait for confirmation, discipline to stick to your stop-loss, and the mental fortitude to manage positions as patterns evolve. Emma's story perfectly demonstrates this balance. She had the technical setup, but she also managed her emotions and adapted to real-time market information. So if you're thinking about adding breakout trading to your toolkit, remember, this is not about chasing the market, it's about interpreting market signals, planning your entries and exits, managing risk, and remaining flexible. Breakout trading can be applied across forex, stocks, commodities, and even cryptocurrencies. It's versatile, but its success depends on preparation, discipline, and continuous learning. Before we wrap up, I want to leave you with a question to ponder and discuss. Think about your trading habits. Do you tend to enter too early, chasing price moves, or do you wait patiently for confirmation? How do you manage risk when volatility spikes unexpectedly? Take a moment, reflect, and leave a comment down below sharing how you plan to implement breakout strategies in your own trading. Breakout trading, executed properly, can be a powerful addition to your strategy arsenal. By combining technical analysis, volume confirmation, disciplined risk management, and adaptability, you can capture significant market moves while protecting your capital. Remember, the market will move, but your preparation and execution are what turn movement into opportunity.
Thank you for listening to the Ultimate Trading Podcast by Bells Forex AudioWorks. If you love this episode, hit follow, leave a quick rating, and share it with one trader friend. It really helps. Right now, head to bellsforex.com/tools. 6 professional-grade trading tools, 100% free, no sign-up. Use them on every trade. They're that good. Full guide is free at bellsforex.com or grab the Kindle version on Amazon. Until next episode, trade smart, stay disciplined, and keep building your edge. Happy trading!